to the Trading Market Technicals morning call video for Tuesday, September 24th. Red across the board, follow through from Friday. Dow down 49, Nasdaq down 9.5, S&P down 8, Russell down 69 cents. The strongest of the five indices that we follow held up relatively well. Banks getting clobbered, not good for the bullish case. But I want to dial into some indicators to really see how this selling has been faring lately. We've been down now for since Wednesday's high, Thursday, Friday, and of course follow through from yesterday. So we're down 3 days in a row. We'll see what are our key areas, and we'll get into that in a moment. Now, what we have here is the dollar, and the dollar index is really kind of quiet. Really hasn't been doing too much. It did retrace a little bit yesterday, but really not much to really talk about. Up literally a penny. So the dollar's been relatively quiet, and I'm still watching the dollar to see what this where this dollar is going to be headed now. Can it get back above these major areas of resistance, which is the 20, 50, and the 200-day overhead resistance of 81.72, and that's really where that's going to need to break out higher in order to get some legs to the upside. Other than that, if the dollar does decide to stay down here, we could literally see lower prices. Remember, the Fed announcement on Wednesday could be a game changer for the U.S. dollar. So remember, guys, although when the dollar looks great up in this area, anything can happen, and that's why we need to look for our entry spots in our charts and, of course, manage them accordingly. Okay, so the dollar really not telling us much, but what I want to do is I want to see how the market internals are faring when we have this little sell-off for 3 days. So obviously let's look at the new lows. New lows are really not doing much of anything, as you can see here. So we're relatively quiet in our new lows. Very good sign on the bullish case, right? So long as we're within 25 to 100, we're doing okay. So obviously we're not looking for these big spikes where the markets are really selling off hard. So we're doing okay. So the pullback so far seems to be very well contained. New highs, we're still above zero, so relatively bullish, right? When the market starts to sell off, new highs start to drop big time, and when they stay below zero for quite some time, which we have not seen here, pretty much all of August 2012 right up to now in September, we have been above the zero line, and of course we've stayed there just for a little bit, and then we pop back up again. So again, still a bullish case. And let's take a look at the NYMO. NYMO now is back in neutral territory, so we are not overbought and or oversold at this point, so we are still neutral, so we want to keep an eye on that. Hitting the Bollinger Band of the 20-period moving average, 20-day moving average, excuse me, on the daily chart. So let's just keep an eye on that as well. Now, yesterday I did say, watch the stocks above the 50-day moving average. Now, that did get a sell signal, but we want to see this 8 EMA start to roll back down again, which it looks like it's doing, but we did get a confirmation sell signal here in the stocks above the 50-day moving average, but that also can change as well. We did not get it in the stocks above the 200-day. Okay, starting to touch it right now, so we'll see what happens for today. In a pre-market session, the minis are relatively flat, maybe down a quarter, so we need to see some driving force to see where we're going, which way we're headed here. Are we starting to roll back down again or not? Here is the end of day tick, again above zero. So the internals are really pointing to bullish signals, right? We're still holding in relatively well for the 3-day down. Now, 3 days can turn into 4 or 5, and then all of a sudden you get this one big move lower. That could happen, but right now things look relatively bullish as far as the market internals are concerned. VIX did have a spike up. We did get low enough to that 1250-ish area. That's that low. It's a big low in the VIX, and we did pop up. Now we still have this area of resistance to contend with. We have the 50 to 200, of course, the 20 above, and the 8 sitting right on top of it. But again, a breakout up higher will obviously send the markets lower. Now, again, here you can still see overbought reading in the stochastics. MACDs haven't turned over yet, and RSI just breaking the 50 line here. So keep an eye on the VIX. Maybe we do roll back down again one more time, and then we get a little bit of a continued selling. I don't think the selling is over, but usually, and I've been looking back patterns from the last year. We have 2 to 3 days down, maybe 4, and then we run back up again. So, but that doesn't necessarily always have to happen. Remember, buying pullbacks for the last couple years have been you've been well rewarded on the longer term picture. But you got to be careful because sometimes this pullback really is for real, and the market does sell off, and then that's where you can get really hurt. So just use it, just a word of caution. That's all. All right, so let's go into our charts now. What I did see was the uptrend channel that we've had since June 24th, I believe. No, June 24th is here. Actually, from early August, has been broken. A lot of them have been breached, especially the financials. They've been hit the hardest, which that is a bearish signal, which I really don't like to see, as well as tech. So we have the spiders here. The spiders did hit that one line I mentioned yesterday, the 169.30, right to the penny. So now we're going to see if we get some sort of a bounce, a back test this lower end of this uptrend channel, and then fail. So we have a new pivotal low, which would be this area here. And this is the area that the spiders that you really need to look out for. 169.30, which is yesterday's low. And pretty much on all of the indices you need to look out for. Because other than that, if we do break that, then we're going to need that little area of support, which is the 20 and the 50-day moving average right up in here, which would be 167.50. Give or take a few pennies. That's where I'm looking at. And then, of course, the lower end here. Of 166.50. So we do have a little bit of support to work through if we're really going to head lower. But the ultimate spot would be, I would imagine, would be somewhere in here, 167, 166, and then of course this low here, this little cluster area of 163, and that's dating back to late August. So this is the area I'm watching. So if we can stabilize here for 3 days, then I think we'd run back up again, at least back test this upward channel here. That's the spiders. Now the 30-minute spiders looks like we're starting to pinch again. So if we consolidate today and then we make a move out of tomorrow, usually we get a little consolidation, and we really did yesterday. Nothing happened. It was lethargic trading, very, very quiet. The pullback for the last 2 days have been very, very quiet. So I do see a lot of bullish characteristics, if you will, in this pullback. Okay, now we could just dump, if something happens, but I really don't see that happening. At least I don't see it right now, what the charts are saying. So I see a very low volume pullback in which we've had low volume in this pullback. So, and I do think that's just an orderly pullback here, and then let the markets digest what the Fed has been speaking about maybe we might taper now in October. Some of the Fed governors have leaked, saying that we might want to taper in October, where Bernanke said we're not tapering at least until January when he retires. So it's a lot of conflict out there, so that's why you need to use your stops and be careful. And I won't be piling on a bunch of positions right now until we really get a good handle on where the market is headed. Okay, diamonds, as you can see here, uptrend channel breached. We broke it, and we broke it pretty bad too. If you could see, the Dow Jones really hit the hardest, but we did catch that secondary uptrend channel from the November 2012 lows right to the penny. Now that is going to be the area where we're going to be watching. We did get a gap fill here, so that's also positive, but we also have a gap area down here that needs to be filled at one point in time. So we're holding above the 50, we're still above the 20 and way above the 200, but now this is going to need to prove itself to see that we are indeed headed higher, or we're going to probably break out maybe 1 or 2 days up and then fail. That would produce a lower high, and then that would give us that bearish symmetry again. So keep in mind the next couple of days is going to be very, very interesting. IWM's holding up really well here. As you can see, this is the strongest of the 5 indices we follow. So we are holding up right above this horizontal support of 105.60. Now a break below that area would put us in a bearish symmetry again, that we're making now lower lows and lower highs, and I guess the next area here would be the 103.75 area of support. Okay, and you have a little bit of gap in this area here, gap support area as well. So that would be the next downside target if we start to roll back down again. Okay, and as you can see here, we're elevated in our stochastics and MACDs. And volume here, volume was a little bit bigger, a little bit larger than expected, but again, still holding up really well. The IWMs are doing quite well. Here is the transports, our leader, breaking down here from our uptrend channel, as you can see, holding above the 8, and we are above the 20 and the 50 here, so we do have some gap areas to fill. But remember, guys, if the transports really start to go, then you're going to see the market follow suit as well. And the banks. Now, Goldman Sachs, and the reason why I look at Goldman, because Goldman is heavily weighted in a lot of funds, and if Goldman starts to go, so goes the market. That's what they say, and it's true because it is heavily weighted and it is one of the leaders in the banking, in the financial sector. So Goldman did lose the uptrend channel. We do have a gap area to fill up in here, which would coincide nicely with the 50-day moving average. We're still above the 20, so we're still bullish, but we did break down with an engulfing red candle. So, and if you looked at JP Morgan, which I don't have here on the chart today, but I did mention that yesterday as well, JP Morgan now looks like it's forming a head and shoulders pattern on the upper end of the range. So, hasn't broke yet, so the pattern is still working. It's not valid at the moment until we break that neckline. But again, it has a big topping pattern. So we'll just see. We'll take it one step at a time. But banks going to need to start really stabilizing in this area. Otherwise, the banks will follow will add fuel to the fire for additional downside in the markets. And if you can look at the XLF, you'll see what I'm talking about. 3 big down days, gapping down, moving lower, breaking the 50, and just barely holding above the 20. Now this gap area here is not quite filled, so maybe they push lower a little bit and then roll back up again. So watch the bank sector, guys. Watch the XLF, the BKX. Very important sector, and this thing needs to rally, needs to stabilize and start to rally. Otherwise, if this really starts to get hurt, a lot of the other markets will follow suit as well. This is also one of the leading sectors that you want to watch when the markets are either selling off or moving higher. Apple had a great day yesterday, big jump up. We had a big gap up, but we gapped up into supply, so we have a lot of area here. This really needs to work through maybe a couple of days to consolidate it, and then Apple maybe gets to 518 again, 513. But it's going to have it really needs a lot of work to do. Again, right now Apple's got a lot of headline risk as well. To me personally, for a day trade, is the only thing that I'd be looking at Apple. Wouldn't be looking to accumulate anything at the moment in this area here. Okay, and lastly is the Qs. As you can see, Big Cap Tech 2 had a little bit of a weak day as well. So it's something that we're going to be watching in the coming days. Again, I do see some further weakness. We are down 3 days though, guys. So remember, we could get a snapback rally at any given moment. And if that's going to where we see where the markets are going, because if we get that snapback rally, is it now the continuation of the trend and going to challenge the highs again from last Wednesday, or is it just a retracement rally and then the markets fail and big money starts selling into it again? Okay, we're still elevated here. Remember that. It's only been 3 days, and the 3 days have been very quiet in the selling mode. So it's still bullish until proven otherwise. Okay, so just keep that in mind. Let's see what happens today. We probably get a breather as well, but Wednesday, Thursday, and Friday is going to be very, very interesting. I do think the markets are going to start making additional moves, and we are in seasonal weakness. Remember that. For the next 2 to 3 weeks, we need to either grind lower, nice and easy, and then we could start looking to buy some strong stocks that held up really well. Or the markets do flush, which I would even prefer, a quick flush down, shake out the weak hands, and then look to rally going into the end of the year. That's the longer term picture. Have a great day, guys, and we'll speak to you tomorrow. Take care.